CEO at Helios Mutual Fund, joins in on the show right now to talk about what he's making of the market. Dinshaw, hi, morning. I had hoped by now you would have changed the glasses.
Asha, don't hope that, because if I
No?
do that, I'm sure the market will be holding up the market. So,
Okay, then keep it on. But I was wondering, what has changed in the market since last when we spoke is finally fueling the positive momentum with this entire GST rate rationalization talk. Part of it is already play out and part of it hopefully is going to be concluded today. Tell me, does it now resurrect the market, which had gotten a little bit range bound and sort of, waiting for triggers to come by?
so Aisha, actually, if you remember last time when we talked, I said there's a lot of liquidity lying around. I mean, the way RBI has gone about infusing liquidity, it's really phenomenal. And the fact that they've been cutting off interest rates quite regularly, again, cheap money lying around, it needed a spark to get it ignited. And I think the government has taken the right step. If you remember the earlier days when we were going through a crisis way back in '07, '08, the government at that time reduced excise duties. That time there were excise duties, literally halved them. And that's what fueled consumption going forward. And you saw '09, '10, and the years which were really good for India as such. So I think that is what was needed, the need of the hour. And that's what this government also reacted to it. And I think it's a right move going about by cutting off GST. But anyway, the fine print is yet to come out. Our feel is that the worst is behind in terms of earnings degrowth or earnings lack of earnings growth rather. Uh, the June quarter again, nothing home to write about, but the fact was that they did show a double-digit growth in earnings, but it was fairly concentrated, limited to a couple of handful stocks, in fact. So that's why if you take them off, the growth wasn't that great. September again, it comes off from the base is very comfortable for September. The base last September was a negative earnings growth. It was the only quarter in the recent past which has seen negative earnings growth. So that base is fairly favorable. But given that probably the fine print of GST will come out probably by the middle of September or the third week of September, I think people will hold back on their spends and probably that quarter also may get impacted. But that's built into the thing as such. I think from here on, all bets are on how GST is impacting demand and how demand comes back with a roar. If it does, I think we are on a very even keel and probably the worst is behind as such.
Okay. So how do you construct your portfolio around that premise that the worst is now behind us and that things are only going to look up? Any sectoral allocation or rejig that you make?
Actually, Aisha, what we've always been invested only in domestic stories. We were never too keen on China plus one plays or PLI plays and so on and so forth. So our anyway portfolio was more leaning towards domestic consumption stories and stuff like that. So that's what we remain there. We did add a few new names. I mean, you've been talking about it, and Ola basically is one of the new names that we added to the portfolio. Given that EVs in the two-wheeler space are going to be a clear winner. In fact, we've added one more two-wheeler player apart from we already have Ather and Ola both in our portfolio, which is there disclosed as of July. And we have one more player which will be coming, which will be in the two-wheeler space apart from Bajaj Auto, which is already disclosed in our portfolio. So we're very keen on that space. I think the entry-level vehicles should do well. However, in the four-wheeler space, we're still not that keen. By the way, why I'm talking about autos today right now is because the GST impact is going to be felt the most in autos per se. So basically, I don't think in the four-wheeler space that even by cutting out the prices by 10, 20,000 odd, that's what the GST impact is expected to be in the entry-level two-wheeler space. I don't think that demand is going to come back. It's going to come back mostly in probably consumer durables and stuff like that, which will be better placed going forward. So.
Dinshaw, how do you guys do this at Helios? You got it right with Zomato, you got it right with Paytm, and I'm guessing the next horse in the line is going to be Ola.
Well, actually, Aisha, good you asked that question because one of our new talks is going to come out, Shamir and me, on our website, which is going to discuss this only. But the fact is that our philosophy, which is called elimination investing, that helps us in a lot of ways. In fact, that moves out the obvious bad stocks and leaves us with a pool which is probably a good pool. And from there on, you just have to time your entry as such. And I think that's what helps in identifying these stocks. We felt that, I mean, after the quarterly numbers, that Ola had done a great job. In fact, it reminded us of the Zomato days when after that huge fall to 40s, it's a coincidence that both bottomed out at 40 literally. But the fact is that even that time when Eternal came back with their quarterly numbers, they laid a lot of emphasis on how they're going to improve their profitability. Same happened with Zomato after this quarter. And we said this is a time to get into this as such. And I think that's what helps out that way.
Oh, well, yes, absolutely, Dinshaw. But your cash on these new age tech companies have been really good. But specifically on Ola, Dinshaw, we all know your take on the whole auto space. You have not been that bullish, but why Ola is the question, given the fact that we have seen such big moves on Ola, and it has been a sort of a wealth destructor for all the investors out there. What are you finding attractive for Ola? Is it because that the company is now poised for some market share, the technology is holding up well? What is making you bullish on Ola?
So basically, Shrishti, the fact was that, as I said, that the whole question about Ola was whether they will overcome. So they've been losing market share, right? And the fact is they've been rolling in losses as such. So, and that's why we never participated in the IPO. We never bought when the stock was up. But after this quarter, if you've seen the way the management has emphasized about the Generation 3 bikes and the fact that most of the Generation 1 bikes are out in terms of the guarantees and stuff like that. And Gen 2 also 60% is over and done with. I think from here on, that overhang of the old technology is over. Obviously, it's a tech-savvy sector per se. And given that the promoters of Ola are fairly tech-savvy, in fact, you saw that in the recent presentation that they gave of the Gen 3 bikes and the way they've developed their own indigenous batteries per se, which are X of rare earths and stuff like that. I think that says a lot about that company. And the only concern was, will they come back on profitability track? And I think that is what they tried to answer. We said, okay, I mean, they did that. By the way, from Q4, that is March quarter to June quarter, the margins improvement was quite sharp, and they kept on emphasizing that they'll be doing that further going forward. So it's probably a faith in the management and the way they've gone about doing it earlier. And that's why we feel that from here on, I think the worst is over for Ola, and from here on, it's probably a way up for them as such. So.
Dinshaw, hi, good morning. Is it just Ola, or your stance for the auto and the consumer space altogether have changed? Because we do remember you were not that confident, but now with the festival demand which will come in, and also the GST rate rationalization will boost the sector. And the next one is the IT sector. Now, the technology heavy index in the US, NASDAQ, is not doing that great, but then the domestic IT players have made a comeback, be it the larger players or the mid-cap IT companies. What's your take on the IT sector?
So Mansi, let's start with autos first. We were not comfortable in autos because of EVs, right? And the ones which we picked up in the auto space are the ones which are EV. So basically, two-wheelers is something that where we believe that a bulk of the hit that EV could have given is done and dusted. From here on, even the incumbent players who've been basically in ICEs, they're picking up their game in the EV space, and that's why you'll see one more new name being added to the in the two-wheeler space from our side as such. So we'll be probably after a very long time we'll be holding 4 two-wheeler players in our portfolio per se. 2 of them are pure EV plays, and one is Bajaj Auto. The fourth one I can't disclose because it's not public as yet. But I'm sure you'll see it when my August portfolio comes out. as such. So that's what we've been doing, and we are very comfortable. But however, having said that, we're still not getting into PVs. I think PV, there's a lot of overhang left. Till now, demand is not that clear anyways, so we'll stay out of that space per se. Even the two-wheelers that we picked up on, the ICE guys who are getting into EVs are mainly entry-level two-wheeler players, and I think they're big beneficiaries of this recent change in GST as and when it happens. Having said that, again on IT, we still remain negative on IT. I don't think basically one big overhang was obviously the way US was going around, the tariff battles that were launched across the globe. The businesses within US itself are going through a very uncertain phase. So that is an overhang for this particular sector. Plus the fact that AI, we don't know how that is going to pan out for the sector. As of now, it looks negative. We'll obviously take a very studied bet on this, and that's why we are avoiding getting into IT right now. And you saw the numbers also. They weren't that exciting numbers. I mean, upping your guidance by 1% and still remaining in low single digits top line growth. I don't see much hope, given that the Ps are still at 23, 24 times, which are way higher than what they were pre-COVID. So, and by the way, the pre-COVID, the growth rates are much better than what they are even today. So that's why I think it's better to avoid IT this year.
Interesting. But Dinshaw, what about the larger consumption pool? Any staples in there? Do they become attractive now post-rationalization, the most unloved segment in the market?
So anyway, Aisha, I think GST, most of the, by the way, FMCG guys, the products rather were at 12% as such. So I don't, sorry, at 18%. So I don't think that will change too much. Even if it does, then there's not, even if it does, I mean, just because my toothpaste is cheaper, it doesn't mean that I'll be brushing my teeth 4 times a day instead of twice a day or something. So it's obvious that that segment per se will be driven by mainly growth, which today is not looking that great for them. And given the fact that the Ps also are at huge premiums, in fact, after the recent GST, not GST, the announcement by the PM, that sector ran up for no reason. So we don't see that working out in a way. So for us, so we try to avoid FMCG plays today.
But what about the other ways to play consumption, Dinshaw? I mean, everything from hotels to real estate and the peripheries, your cement, pipes, etc. The entire bunch makes up for consumption. Anything that you're liking?
So basically, Aisha, what we did conclude was, and very jokingly also, that the fact was that if someone's going to save a couple of $1,000 on his basket of products that he's been ordering, he'd rather go in for quick commerce plays and buy some more of the Zeptos and the Zomatos and the Swiggies of the world. So that could be one area. But anyway, having said that, I think if the purse is becoming bigger for discretionary, the domestic plays, not only the consumer discretionary, because that is not that great a play in the listed space anyways, apart from ACs, which will go see a clear reset in terms of GST if that happens, per se, from 28 to 18. But if that doesn't matter anyway, ACs are more of a play on the season per se. So maybe they'll wait out till the summers come in and stuff like that, the purchase of ACs. But I think the bigger play would be on the hospitality sector. I think with these kind of savings, people will look at tourism more, domestic tourism and stuff like that. So I think we're playing it through that rather than through actual picking up consumer durable companies and stuff like that. I don't think that's gonna work that much. Anyway, they are expensive. So we'd rather play it through these kind of ways.
Right. Okay, Dinshaw. Always good to have you on the show. And let's actually figure out from one of the large consumption players whether they are excited about GST rate rationalization or not. Joining us right now, Gunjan Shah, MD and CEO at Bata India, on the show. Gunjan, hi.